Welcome to the B.F. Anderson Technical Report for November 17th. How the Scots Invented the Modern World. This is a great book. I recommend it highly. Basically, what the book details is how in the 1600s, Scotland was considered one of the most educated countries in the world. It was a poor country, but they required that every child had to go to school, and they had to earn Latin. And so when the big migration came to the United States, a lot of Scots came over and started inventing things. So the reason this is important is that as we analyze companies such as Apple, it's all about the inventors. Now, one thing about inventors I've noticed is it's almost like a hit record. They have one really good invention, and that kind of makes the whole story. So if you look at Apple and just go back to 2003, how can you find these exceptional situations? Well, first of all, the first thing to notice here, this is the S&P 500. The market's in an uptrend. So you have to have an uptrend to get anything going. So with Apple, and we were looking at the stock. Now realize back here, Apple, all they had was the Macintosh computers and the iPod, which was a music device primarily. And no one knew they had the phone, but somehow somebody started to pick up on it right around here. You can see where the volume started coming in. The pattern tightened up quite dramatically, not a lot of sellers, and the stock took off. So what you're looking for is what we call a gap up, and the story has to be, is there something new here, some type of new invention, something going on. So that's kind of one of the things that you need to be aware of. So let's just look at the market itself. Here's the NASDAQ. We continue to see improvement there, meaning that we're above the two moving averages, meaning the 25-day and the 50-day. The 25-day, which is the lower moving average, has turned up, so the NASDAQ is showing some signs of improvement. However, the mid-caps, which are the S&P 400, you're actually seeing a golden cross. So we're starting to see some strength here in what looks like the formation of a bottom. When it comes to bottoms, this may be the bottom or a bottom. We're not sure it's the bottom, but it is looking like the market is coming off that bottom. And here with the New York Stock Exchange, you can again see a golden cross above the moving averages, looking very positive. On the small caps, they're strong as well. The small caps have improved dramatically. Now on the S&P 500, you see the same pattern. Now we're getting the golden cross on the S&P. So basically, we are getting a rally here. Hopefully, it can sustain itself. Now, where things will really start to get interesting is if the S&P 500 can break above the 200-day moving average, which is currently in a downtrend. Now, if you go back for this year, and you'll notice that we were rejected basically. The S&P was rejected here, down, made a low, came back in the summer, tried to retest the 200-day, was rejected. So the real question here is this time going to be the magic time? Will we break above, say, 4,100 on the S&P? That would be a real confirmation that maybe the low is in. So we just need to keep our fingers crossed and hope for the best on that. Now on the aggression index, which is a very simple ratio of technology stocks compared to consumer staples, which is things like toothpaste, you can see here quite a waterfall decline here, quite drastic. Now it has recently made a fresh low, so this isn't a downtrend, because if you make a lower low and then you fail to make a higher high, that's a downtrend. So the aggression index is saying we still got problems out there. It's not exactly a wonderful deal. But if this particular ratio could break above this lower moving average like it did back here, where it breaks above the lower moving average and that lower moving average turns up, again, that could be a confirmation that the bottom is in. Now, we are noticing here in the economic indicators, interest rates have fallen off quite a bit. Now, this morning I think rates are up a little bit, but we're down to 3.69 on the 10-year Treasury. So the basic thinking on the 10-year Treasury is we believe that when it comes to the terminal rate on the Fed funds rate, we could see an indication from the 10-year Treasury as to where that terminal rate is. But right now, we've gotten back below 4%, and interest rates are declining as of today. Now, on oil, we're moving pretty much sideways, and the financial stocks actually have gone into an uptrend along with the market. Actually, the good news here on the financials, they have broken above the 200-day moving average, which is important. Now, another indicator we think's kind of giving us a little bit of a yellow light. We're not getting a green light, but a yellow light. We only had 28 new lows back on Tuesday. Now, we're getting the lowest readings of new lows in quite a long time, since the summer. But, we're getting basically the indexes moving above the moving averages. We're seeing interest rates somewhat stabilize. And we're getting new lows that are under 40 a day, which is positive. Now, the other question would be, what is the bond market? Now, one thing you have to understand about the bond market is substantially larger than the stock market. There's more money in bonds than there is stocks. So we think that the bond market is pretty darn efficient, and we're seeing some improvement here. This is a high-yield corporate bond fund. This is a junk bond fund. Basically has broken out above that 10-day moving average, making higher lows, not yet really making a higher high here, but a reading of around 74.5, 75 on this particular fund could mean that the bond market is starting to improve. However, right now I would say bonds are fairly neutral. Then if we look at government bonds, this is a TLT, this is 20-year Treasury bond. You can see here kind of breaking out above the 10-day moving average, and then also breaking out above the 50-day moving average. So we're starting to see somewhat of a bottoming process in the bond market, which could be very favorable for the stock market. We're hoping that's the case. The other thing to be aware of is volatility. We're starting to see a downtrend in volatility, which again is a positive. We are seeing a lot of positives here. Whether or not this thing can follow through, like I say, keep your fingers crossed and your toes crossed. But basically, the volatility is trending down. Remember now, above 30, which we've been at most of the year, above 30 indicates bear market. 21 is the long-term average. So we're definitely moving in the right direction on volatility. Volatility is coming down. The yield curve continues to be troubling. We're down to a reading of 0.57, which means that the 2-year Treasury note is yielding 0.57 more than the 10-year Treasury note, and that's usually an indication of recession. Now, let's take a quick look at some of the top 5 that came to our list as of this week. This is a company called Impinj. They are involved in technology, RFID technology. You can see here earnings came out, gap up, pretty much kind of challenged the gap, really held barely, now working its way back up. So keep an eye on that one. Array Technologies, which has to do with solar. You can see here breaking out, nice volume gap up here, and is in an uptrend. They primarily make the equipment that installs the solar, like the racks that go on the roof and so forth. This is Axon Enterprises, broke out to a new high yesterday. This is an inventor. This company invented the taser, and they've also invented a software platform used by the police where they can maintain their video records from their cameras, as they have body cameras and so forth, but they also manufacture the taser. Here is Enphase, another solar situation. This company is involved in the inverters that go on the panels. The Inflation Recovery Act that was passed here recently is really kind of giving these stocks somewhat of a new life because there's a lot of construction of plants for solar in the United States. First Solar just announced, and here's First Solar, they just announced this morning that they're going to be building a $1 billion plant in Alabama. They haven't said specifically where in Alabama. They're going to hire 700 people, and they make their solar panels, or they actually make something called solar film out of a compound called cadmium telluride, which is a byproduct of the manufacturing of zinc. So there's plenty of it out there, and it's cheap. So anyway, keep an eye on First Solar. So all in all, what I'm saying is don't get too aggressive here. If you see something that really gets your attention, maybe you do half what you would normally do, but hopefully this market is starting to pick up steam. Thank you very much.